Okay, good morning, everybody. Happy Friday, September 4th, 2020. This is Dan Russo, the Chief Market Strategist at Chaikin Analytics, bringing you Stock Market Today. As always, Stock Market Today, sponsored by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email where we get a lot of the content for this show, also give you daily stock ideas to consider upon further research. That hits your inbox every trading day before the market opens. Quick programming note, no show on Monday. Markets closed in the U.S. for the Labor Day holiday. So major U.S. indices came under pressure yesterday, ending just off the worst levels of the day. The NASDAQ and the S&P 500 saw their biggest daily pullback since June. All sectors were lower on the day, with tech and discretionary being the worst performers. Treasuries were mostly stronger, providing a bit of diversification as the curve flattened. The dollar was little changed against the euro and the yen. Gold finished down 40 basis points. WTI crude off 30 basis points on the day. So we're hard pressed to find a specific catalyst, but recall what we've been talking about here for the past couple of weeks as it relates to breadth divergences, overly bullish sentiment, and just the stretched nature of the market. Now, as we get to the desk this morning, futures are up 30 basis points for the S&P. NASDAQ futures are actually trading lower ahead of the non-farm payrolls report due out at 8:30 a.m. So those will be out by the time you are watching this show. Asian equities were mostly weaker overnight. Australia down over 3%, Hong Kong, South Korea, and Japan all down more than 1%. However, this morning, European equities are mostly higher. Treasuries were weaker across the curve. The dollar is little changed against both the euro and the yen. Gold is up 40 basis points. WTI crude is up 60 basis points to kick us off on a Friday ahead of a three-day weekend where I would say we are bent, not broken. Okay? Bent, not broken. Remember, we said we were extended. We talked about it, right? We said yesterday, further extended, further extended. We've been talking about respecting the trend while being mindful of risk management and just kind of knowing where you are within the context of the trend, right? We were saying we were extended, overbought within the context of an uptrend. So now we get a vicious pullback yesterday. The indicator's still overbought, which is kind of interesting to me. In an ideal world, what we want to see is 3,400 hold. Right, we have support 3,300 to 3,400, but the ideal world is for the breakout level to hold. If 3,400 holds to the upside, we work off the overbought condition, then it makes sense to start looking for ideas, leading stocks, leading areas of the market, right? Especially if Chaikin money flow is still bullish, right? If the trends are still there. Now, we were trading at record levels, so no price-based resistance. I mean, if you want to start to carve it out at, Wednesday's high, sure, but let's give it some time to play out. So for me right now, we still have to work off these overbought conditions. The SPY, the NAS, they're both overbought. And they continue to be overbought despite the sell-off yesterday. We're obviously going to get a big news announcement today with non-farm payrolls. We'll see how it plays out. But that's how I'm framing it up. Do I want to get super aggressive? No. Has my risk management process been in place, and hopefully yours too? Absolutely. Risk management is always key. Did you have stops trigger yesterday? Honor them. You don't know what's going to happen. You can always get back in, right? If you set the stop ahead of time, you've already made the decision. If your stop triggered, honor it. If it didn't trigger, the trend here is still up, right? And still above the key breakout level. So that's how I'm framing things today. So as I said, bent not broken as we think about our market in a minute. SPY and Qs work off extended positions. Key levels to watch, 340 for the SPY, which we touched on, but really importantly, I think 150 on the IWM. Small caps, right? And we've been talking about small caps, so they're not at all-time highs. They're consolidating within the context of their trend after breaking above the June highs. That level is 150. That's the level you want to see hold on IWM, right? And then you've got to build your framework around that. If we're above 150 on IWM, if we're above 340 on the SPY, and we get closer to oversold levels, now you have an environment where it makes sense to get more aggressive. However, if we break those levels, you reevaluate and you think of your portfolio in portfolio terms, right? Do you have too much exposure to one group? Then is that group getting hit? You need to rethink how you're constructing your portfolio. Did you have some fixed income exposure yesterday? It was a diversifier, right? Think in portfolio terms. Relative strength in semis is still a concern for me. The flight to safety in treasuries, we'll see if it gains some legs, and futures are mixed ahead of non-farm payrolls, and that's largely a function of SPY and Dow futures are up, NASDAQ futures are down. So let's look at the major indices from a power bar perspective. Some not a lot changed really on the day yesterday. So you had the big hits across the board, especially the NASDAQ. Dow down 2.7%, 11 to 1 bulls to bears there. S&P 500 down 3.5%, a little bit of a deterioration, but not awful. 156 to 56 bulls to bears there. The NAS, the ratio didn't even blink yesterday, which is kind of interesting. Down 5% on the day. Small caps down 2.9%, 663 to 306, bulls to bears there. And here's your bonds ticking higher, sending yields lower, right? Big picture framework, according to the Chaikin Power Bar, small cap stocks and large cap stocks remain bullish. Now let's hit our stock of the day now. This one's kind of interesting because I was looking for some names that were trading near their highs but were weak. What does that mean? You know, they're trading near high levels, 1 month highs or so, but have the potential to roll over and are not likely to break out. So Guidewire fit the bill there. GWRE was only down 63 basis points yesterday, but look at this trading range. We're in a 1-year trading range and trading near the top end of it. So I think as long as Guidewire is below 125, there's downside risk to the 100, 105 level, right? Notice that as we trade up here near the highs, money flow's gone bearish, overbought and underperforming the market. So if you're looking for names to express some bearish exposure, I think that setups like this look compelling. Take a look at Guidewire, GWRE, decent sized stock, about 9 billion market cap. So you should be able to get some action in the options market if you're looking to express a bearish view in a name that, quite frankly, is not participating to the upside. Take a look at Guidewire here today. Let's look at our sector tracker now. Moving to the major sectors over the last 5 days, that material is still at the top of the list, our favorite cyclical sector. So that theme is still playing out. Safety bid, utilities, staples, and real estate are the only other 3 groups higher over the past 5 days. Middle of the road, discretionary industrials, fins, and comms. And then, then your aggressive groups got hit, right? Healthcare, info, tech, and then energy is just the dog that energy is. And even on the strong up days earlier in the week, energy just not really participating. So my question is, why would you want to play there? I don't, and I would love to, right? Because there could be some massive opportunities at some point, but the setup is just not there. It is just not there. So just keep that in mind as you're going through your work today. Let's hit our industry in focus today, which is healthcare services. Remember, we've talked about healthcare quite a bit over the past few days, and we've said that there are some groups where it makes sense to be looking at them and some that don't. So over the past 6 months, this group's been an outperformer, up by 6.9% over the S&P. Power bar ratio very strong. We have it here at 20 bulls to 2 bears, ranked number 4. So Anthem, UHS, and Humana are the types of names that you want to be considering for bullish ideas within the space. I mean, this is a solid power bar. Contrast that with biotech and pharma, which is under pressure now. I did make a bit of an error here, and I'm going to correct it as we speak in real time. Take a look at how the sausage is made. I forgot to change my chart. So let's do that now and then take a quick look at it. We'll give it a quick cut and paste for you. I apologize for this. And there you have it, folks. Broaden everything out here. And what you'll see is a very bullish fund outperforming the market with bullish money flow and a strong trend. Right. So if you're looking for ideas within the healthcare space, I do apologize for that. Take a look at something like XHS, which is trading in a consolidation just below those February highs. Let's dive into what's trending now. Yesterday's S&P 500 movers and shakers, our gainers and losers. Gainer side of the board is kind of interesting because even with that huge hit to the market yesterday, it did really seem isolated to the extended names, the growth areas of the market, right? So some of these more reopening type trades actually held up pretty well. Carnival making some comments about restarting some of their lines. That stock up 5.2%. IVZ, I didn't see anything company specific to drive trading in that name, up 4.8%. Norwegian Cruise Lines likely heads higher on the Carnival news, up 3.7%. Ralph Lauren, no real news there, sends that stock higher. To send that stock higher by 3.6%, I will note it is very bearish here in our model. And PVH, Phillips Van Heusen, their earnings report was solid enough to send that stock higher, up by 3.25% on the day. Loser side of the board, semis got hit hard yesterday, and Corvo was a name that we highlighted, and our timing could not have been worse. Corvo was our stock of the day yesterday, and guess what? We got it wrong. All right. So take a look. Maybe there's an opportunity there on a pullback. I don't know. I'd have to revisit it. NVIDIA, NVDA, down 9.28% as semis were hit. Fortinet, part of the Mo group that got hit. Skyworks, another semiconductor name, down 8.75%. And Zebra, a technology name there. Nothing company specific that I could find on any of these stocks. I really just think it got caught up in the trade. So just something to keep in mind. We'll see how it plays out. Remember, I said we're still, the NAS is still overbought. Semiconductors, we're going to take a look a little bit later on here in just a moment because I think there's some interesting developments. But first, let's talk about risk. High yield versus treasuries has rallied back to the declining 200-day moving average while remaining below the breakdown level. What's interesting to me is we're now inflecting lower from the 200-day moving averages as treasuries were bid. And you can see how it's playing out against the backdrop at the bottom of the screen of declining 10-year yields. Right, so flight to safety yesterday certainly helped, but bigger picture, I think that this is an important inflection point from a risk on, risk off standpoint. You'd love to see this. If you want to see risk on, you'd love to see this start to break above the 200-day moving average, which has not been the case. So something to keep in mind there. Meanwhile, the RSI is holding bullish ranges, but it did give you a small negative divergence here with yesterday's action and the move back towards the 200-day moving average. So if you're trying to gauge risk on, risk off, you're trying to pay attention here to the high yield versus treasuries ratio. Interesting to me as well yesterday, this is part of the reason why I'm saying it's bent, not broken, and we want to give it some more time to play out, is if we look at discretionary versus staples on an equally weighted basis, and that's to account for the fact that Amazon is a massive weight in the discretionary space, on a day like yesterday, you would have expected this to really kind of roll over hard in a really risk-off type environment, and it didn't. So that's kind of interesting to me. The fact that it didn't roll over, even pull back to test the 200-day moving average, which is still declining. But so we're still below the breakout level, so not on the all clear yet, but it's interesting to me. I sit up and take notice of things like that. The fact that we didn't see a rip higher in things like gold yesterday. One day does not a trend make, and maybe it begins to unfold, but these are things that we pay attention to kind of guide our view. So that leads me to believe bent, not broken, but watch the key levels, right? 3,400 for the SPY, 150 for the IWM become important. Interestingly here, this ratio is holding bullish ranges for the RSI. The RSI, the ratio is holding bullish ranges. So I find it interesting that this did not tick lower in a big way yesterday in what should have been a massively risk-off type environment. So leads me to believe bent, not broken, right? Contrast that with, what was happening back in February when this was just perpetually trending lower and below the 200-day moving average and then fell off the cliff. So just something to keep in mind here as we're going forward. And finally, this one is the big one for me, semis on a relative basis. Says to me, pay attention. Okay, it says to me, if that 3,400 level breaks on the S&P, if 150 breaks on IWM, you have to start to think about being defensive, especially if this is still rolling over. Okay, it's series of lower highs and lower lows here in the near term. It's interesting to me that in that that FOMO rally leading up to yesterday, semis didn't make a new relative high. all while the RSI is making a series of lower highs and trying to hold bullish ranges. So something to pay attention to. I really do think it's kind of a mixed bag here. We want to respect price and respect trends while being mindful of the environment. So that's going to wrap us up for today. I do apologize again for having to change the chart around. I hope that everybody has a great weekend. Take some time to take us for a test drive. I will be back on Tuesday.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.